Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about JANUS Henderson Group PLC quarterly report. JANUS Henderson Group PLC offers a diverse range of services to its clients. The company provides asset management services through its subsidiaries, catering to institutional, retail, and high-net-worth clients. Its portfolio includes separate client-focused equity and fixed income portfolios, as well as mutual funds in various sectors. The firm's investment focus spans multiple industries, including commercial services and supplies, air freight and logistics, consumer durables, and apparel, hotels, beverage and food products, healthcare, diversified financial services. JANUS Henderson Group PLC also invests in public equity and fixed income markets, real estate, and private equity. The company has a global presence with offices in London, Jersey, and Sydney, and typically invests between $10 million and $30 million in companies based in China and India. The recent surge in JANUS Henderson Group PLC's JHG stock price can be attributed to several key events. The most significant contributor was the non-binding acquisition proposal from Nelson Peltz's hedge fund Trian and General Catalyst, which led to a 12% jump in shares on the day of confirmation. This takeover offer valued the company at approximately $7.2 billion and pushed the stock price to an all-time high of $48.55. Additionally, strong financial performances in Q3 and Q2 2025, including a 20% increase in adjusted diluted EPS and a 6% year-over-year increase in adjusted diluted earnings per share, respectively, also contributed to the company's overall performance. Furthermore, strategic partnerships, such as the one announced with CNO Financial Group through Victory Park Capital, have likely had a positive impact on the stock price. Overall, these collective positive news items and financial performances have played a significant role in the appreciation of JANUS Henderson Group PLC's stock price over the past year. Net income and profit margins. A mixed picture. The financial summary reveals a mixed picture regarding the changes in net income and profit margins. On one hand, net income increased by $114.8 million, 421%, from Q3 2024 to Q3 2025, indicating a significant improvement. However, for the 3 and 9 months ended September 30, 2025, net income decreased, albeit with specific amounts not mentioned. Profit margins also showed a decrease in operating margin from 26.4% in Q3 2024 to 24.6% in Q3 2025. On the other hand, the effective tax rate for 3 and 9 months ended September 30, 2025 decreased due to the absence of non-deductible items and disallowed non-controlling interest. The overall change in net income and profit margins for the full year 2025 compared to 2024 remains unclear. Nonetheless, these fluctuations suggest that the company's financial performance is subject to various factors influencing its bottom line. The company's debt level and interest expenses have undergone significant changes. Notably, long-term debt is valued at a level 2 fair value measurement, indicating some degree of complexity in its valuation. The credit facility has increased from the previous year, although the exact amount is not specified. Interest expenses have also seen substantial fluctuations. For the 3 months ended September 30, 2025, interest expenses rose by $1.8 million compared to the same period in 2024. However, for the 9 months ended September 30, 2025, a more significant increase of $7.3 million was observed. Interestingly, this trend reversed for the 9-month period due to lower interest rates on cash balances, resulting in a decrease of $6 million. Overall, these changes suggest that the company's debt level and interest expenses have undergone considerable shifts, reflecting both increases and decreases depending on the time frame considered. Management is optimistic about the company's outlook, citing several key points that highlight its growth strategy. The acquisition of VPC is expected to bring significant growth opportunities and synergies, while also providing tax benefits through deductible goodwill. Additionally, management anticipates high single-digit adjusted non-compensation expense annual growth in 2025, driven by strategic investments and operational efficiencies. The company will benefit from the full-year impact of consolidating several businesses, including VPC, TCM, NBK, and Tabula. Management's investment strategy involves leveraging fund management teams to cross-invest assets and create value for clients. The company has a strong capital position, with £301.6 million, $406 million above regulatory requirements, which will enable it to fund long-term commitments through existing cash and operations, or by accessing capital markets as necessary. Overall, management's comments suggest that the company is well-positioned for growth and is taking steps to capitalize on new opportunities while maintaining a strong financial position. The company's financial summary reveals that it has taken two key steps in its financial management. Firstly, the company has paid dividends to its shareholders, indicating a commitment to rewarding investors for their loyalty. Secondly, the company has also engaged in share buybacks through corporate buyback programs and share plan repurchases, demonstrating a strategy to return value to shareholders while also potentially influencing the company's stock price. That concludes the financial summary for JANUS Henderson Group PLC. Feel free to comment below, and I will be happy to answer them when possible.